Let's talk about an asset that has been rising in value in recent sessions. Eugene Weinberg is Senior Commodity Analyst at Commerzbank. Let's focus in on gold, Eugene, for a moment here. What do you think the further upside is over the short term for gold?
Yeah, right now it's a fear indicator more than anything else, despite the news that the most important demand sector for gold, the jewelry sector, is asking for less and less, and this sector is accounting for 70% of the total demand. The prices are still increasing, which is basically showing you that the investors is looking at it as an ultimate safe haven right now. And should the problems in the financial sector, should the equity markets stay in turmoil, I think that the gold price, despite the dismal outlook for physical demand, will stay high and will probably even move further. Although, as I said, the physical demand is currently quite weak.
And as far as you're concerned, the supply of gold to the marketplace is satisfactory to meet current demands?
Yeah, well, the thing is that the mining production right now is enough to supply the demand, because in most of the countries producing gold, the currencies were also losing in comparison to the US dollar, so the costs in US dollar were also quite low. So the outlook for the demand supply only will be rather negative for gold right now. But I think that the investors more looking into gold as an insurance, against bad health of the banking system in general, of the stability of the currencies and exchange rates. So it's more a fear indicator than anything else. And should the fear stay on the market, I think that the prices will stay high as well, and will probably even move higher towards the year end. I see already the prices going 4-digit.
So if I'm looking to own this as part of a balanced portfolio at the moment, the message I'm getting from you actually seems to be quite negative. I mean, if I only see gold at this point as a fiat currency, my underlying motivation for owning gold and many other commodities at this point seems to be fairly weak. Or is there a bigger macro story that I'm missing?
Oh, there is a macro story behind it, because gold is not a commodity, and the demand supply are not really playing such a big role for gold than for any other commodities. Before it was also a scarce commodity, but right now we have gold which is enough already in above the earth supplies will be enough if all the mining production stops for another 50-60 years. So it's not a scarce commodity, and the gold story is not a commodity story. It's more a stable currency, and it's right now being considered just an insurance for most of the investors. So it's advisable for the moment to hold a part of your portfolio, a small part of your portfolio, up to 5 to 10% of your portfolio, allocate to gold, just in order to prevent and protect you in case that something happens to the system. So it's just a systematic risk. It's just a risk of the unstable currency environment, which drives the prices, which drives the demand higher. And I think it's advisable to hold a part of the portfolio in gold, despite the dismal outlook for the physical jewelry demand.
Eugene, thanks for your time, sir. Eugene Weinberg, Senior Commodity